$1,000 is 9 doubles away from $1 million.
Wow.
Now you take $1 million and see what happens if we double it 9 times.
1 million goes into 2 million, 4 million, 8 million, 16 million, 32, 64, 128, 256, 52, a billion.
$1 million is 10 doubles away from $1 billion.
But how do you find the doubles?
Well, that's the game.
So, easy to say, and perhaps harder to do. But where are these doubles, triples, and 10x's? And what would you do with $1 million? New house? New car? A Yamaha jet ski?
1,000, 1,000, 1,000. Are we still going up?
So on my channel, we've already gone over buy low, sell high. Buy something when no one loves it, and sell it when the hype sets in, and people are giving you a more than decent price. So, how would you do this? Well, seems we're heading towards electric vehicles. Tesla's growing year by year. And what do Teslas need to go? Lithium-ion batteries. And what do lithium-ion batteries need? Graphite. So things to know about graphite. In a Tesla, you might have a mix of 50% natural graphite, 50% synthetic graphite. Both have benefits and minuses, etc. So synthetic can be made from a byproduct of petroleum coke. Natural graphite comes from deposits in the ground. So currently, 2022, less than 1 million tons is needed per year of natural graphite. This number will grow to 4 million by 2030 and possibly 8 million by 2035. So right now, we don't need that graphite, there's plenty on offer. Fast forward to 2025-2030, we're going to need that graphite and it's got to come from somewhere. So here's an example of what I mean. Core Lithium, a lithium company. We didn't need lithium back in 2019, 2020, well not much of it anyway. Fast forward to now, we need more than they can get out of the ground. Hence, Core Lithium was selling for less than $50 million. And now is selling for $2 billion. You bought them at $50 million, waited for the demand to come. Now they're making $100 million to $200 million a year, perhaps more. They've been re-rated to about $2 billion, and there was a 20x. So similar to lithium, we didn't need it, then we did. Companies who could get into production did very well. So what are some companies that could do very well in the graphite space? Companies selling for less than $100 million that could be making that and upwards per year, giving you a 10x or 20x. So first on the list, Volt Resources, VRC on the ASX, market cap 100 million, cash 2 million, and in the scoping study, it shows them making $300 million Australian per annum. So I said they'll make $300 million Australian per year. The real figure is US $195 million in EBITDA. So convert that to Australian dollars at the moment, well over $300 million. That's for a 22-year mine life. Impressive figures here. Take in mind that's for this price of graphite. This price could go up if there's a shortfall in graphite in the medium term. Then people go a bit crazy, put a bigger price tag on the company, etc., etc. So they do have to raise this $173 million to build the project for this many tons, but they can do a smaller project. And they do plan to do a smaller project first, which obviously costs less. It might cost them 50 million or 30 million. They can then start going with the graphite, make money then, and then get more favorable terms when raising this money here. So Volt don't only have that project going, they have an actual working graphite mine that's making money as we speak in Ukraine. So it's said to make 90,000 tons per annum. Say it's $1,000 profit, that's 9 million per year. They earn 70% of it, meaning maybe $7 million a year. Let's go a bit generous, say $4 million a year profit. So there's a bit of money coming in for them right now, and they can expand this project. It's not huge, but it's not small. So to wrap up Volt Resources, you pay $100 million, you get $2 million in cash, you get a working mine or 70% share in a working mine in Ukraine, which has a capacity of 30,000 tons. So that's actually $30 million profit per year. So that's quite good. I'm not sure if they've all paid off this mine. I assume they have. And then that will actually kickstart them into this big project here, which they have to spend $173 million US to build, and they'll get that back in the first year or once it ramps up. So I can easily see this getting revalued from 100 million to maybe $1 to $2 billion, 10x on the share price. So there's a 10x in market cap and 10x in share price, and the difference between the two is dilution. So the better terms they get are raising the money for these projects, the more return on share price you will get. So that's wrapping up Volt, and we'll move to the next company. So the other company I like is Mason Graphite. They're on the TSX. You can buy Mason Graphite, the whole company, with a market cap of $38 million. For that, you also get $30 million in cash, and you get a high grade, huge resource in Quebec, Canada, friendly mine jurisdiction with hydroelectricity. So if you read the most recent news, they're actually going to sell half the projects or do a joint venture with Nouveau Graphite. So it's basically 50-50. These guys come in with some more cash, some expertise to get the stuff out of the ground and into the battery. So they benefit largely from that. So you only get 50%, but you do get help along the way, which is a benefit, and I still see it doing maybe a 10x once graphite becomes really sought after, as I believe it will with lithium-ion batteries coming to full swing. Capex for this one, 258, that's quite a bit. Take in mind, this is an old study. In the joint venture agreement, they're going to do a new study for 250,000 tons per annum of graphite, which will mean they might make $250 million per year, and they own half of that, so what's that, 125 million? So if they're making that much per year, you'd think they'd be worth a lot more than $38 million. But bear in mind, CapEx have to raise that as well, so it could be some dilution. Yes, but very high grade. If you look at the grade of this project compared to others, very high grade. So 27%, that's like tier 1 stuff. Volt Resources was more between 5 and 10%. So to wrap up Mason Graphite, you get 50% in this big resource, which in the old study had pretty good numbers. Bear in mind, these numbers will change as perhaps this graphite price doubles, meaning these numbers will double. Payback period goes from 3 years to 2 years or 1 year, like it did with lithium. Quite possible in my opinion. This company's high grade, high resource, so it makes sense for the world to bring this one into production, and I believe it will happen. So this was for capex, that much for this much tons. They're going to do 250,000 tons in the new study, which mean a bigger capex obviously, but more money. So that's what you get with buying this company. You pay 40 million, you get half of this project here, which should make it into production. Yeah, so I definitely see this getting revalued to maybe $1 billion to $2 billion. The excess on share price will depend on how well they can raise this money, so they don't dilute the share price so much. But 40 million or under 40 million for the whole company is a good starting price, and they also have a good decent amount in cash as well. 13 million could dribble down a bit, and then their partner in the JV is coming with more cash. The partner has to pay for the feasibility study. So basically they're selling half the project and saying, okay, we'll give the half project, we used to come do the new feasibility study, give us 15 million in cash to move this project into production. So another good one to buy. You need to buy something getting into production if you don't want to lose your money. And that's it for the graphite wrap up. Please like and subscribe, and if you find any good graphite projects, they do pop up, let me know.